on Bloomberg Quint.
Welcome to all our viewers. You're watching Countdown right here on Bloomberg Quint. One more tepid day for the markets. It's a start to the new expiry for November series, but doesn't look like it's in any uplifting mood. We'll talk about all of that and more, but let's take the headlines for the time being. Markets have recovered from the lows of the day, but are trading with cuts. The Nifty is holding on to the 10,000 mark. The auto index is the only sectoral gainer. Ujjivan and Equitas stocks slump after RBI asked them to list their small finance banks within 3 years of starting operations. Yes Bank has missed analyst estimates in the second quarter on account of higher provisions. The stock is the top loser on the Nifty. And 4 Nifty companies, Dr. Reddy's, ITC, ICICI Bank and UPL, will report their second quarter numbers today. Good afternoon, Neeraj. The start of the new series not so enthusiastic after all.
Yeah, it's not looking all that great and probably not looking that great for UPL as well. Devina, the numbers are just out on your screen. If I can just bring up that stock price and see if there is any immediate knee-jerk reaction, if at all. There is a bit of a growth on the YY basis, but yeah, you see this knee-jerk reaction because the numbers are lower than what the street was working with. So the numbers on your screen, revenues at 4257 crores versus 3770 crores, but I think the net profit at 270 crores is lower than what the street was working with. I think the lowest number was probably northwards of about 300 odd crores on the bottom line. Some estimates were as high as 340, 345 crores as well. But I think on the consolidated pad, this at 270 crores is probably one reason why the stock has just come off in the session today. 1% lower, nothing too dramatic, but slightly lower than what the stock was actually. Well, 1% on the net basis, but from the highs, about a couple of percentage points lower for a UPL. Anyways, bring up the heat map. And as Devina was saying, it's not been the brightest of starts for the new series. So there is a bit of a green that has clawed its way back. And while Yes Bank remains the principal loser, I think Indiabulls Housing Finance not finding itself in the top 10 losers is also something they need to monitor, because when we started off the show, Indiabulls Housing Finance was the second worst performer on the index. Now as we speak, it is trading marginally in the green right here. So day of recovery for certain names. Titan is up about 2.5%. Tata Motors, which was at 160 or so 168. The start of the trading day is up about 2%. But autos have bounced back. HDFC is up. Reliance Industries is up, and that is giving that bit of a support to the markets. No, we have not closed sub 10,000, and that's a bit of a relief. But what about the broader end of the spectrum?
Well, it's a relief as yet. We still have about 1 hour of trade left to go. We have to see how Europe is trading and any other cues that come in terms of the other earnings that are expected to come out. In terms of specific stocks in the mid-cap and the small cap, so these are 2 specific names, particularly Ujjivan and Equitas. These are the 2 names that you need to focus all your attention on, at least in today's session. And that's the kind of losses that you're seeing. Equitas, 30% given up. But remember, this is not it's not at the lowest point of the day. So it was down closer to about 33, 34% some time back. Ujjivan also, this is not at the lowest point of the day. But nonetheless, with the RBI circular stating that they have to list their small finance banks within 3 years of operations, that's causing a little bit of a pressure in terms of the business model itself. And for Equitas, aside from the small banking business, they don't really have much in the holding company in terms of a business. So that's something that you need to watch out for. Edelweiss reported numbers, a strong quarter for them, and from being down closer to 3-4% in the morning, the stock's up about 4% odd. Raymond is the other one that's reacting on numbers, and so is L&T Tech, which is up about 7% odd. Other mid-cap losers then, and Infibeam continues to grind lower in today's session as well, down 4.2%. Reliance Capital, GM Financial from the NBFC space is down about 5% odd. And lastly, some volume buzzers. SIAT does well, about 7.5% higher on numbers as well. 25 lakh shares traded. Kajaria Ceramics, yesterday numbers came out during the same show. The stock was up 4% today, again 6% higher. And Dish TV, after plummeting 17% yesterday, seeing some amount of short covering in today's session, 9.5% higher. But let's take a look at what's been happening in the futures and options space. It's the first day of the new series. Agam is joining us with more details on that. Agam, good afternoon.
Well, good afternoon, Devina. Well, let me start off with the Nifty and the banking Nifty futures. What we're really seeing is, considering the Nifty is declining by well less than 0.3% right now. Despite that, we are seeing an increase in open interest, and this is largely because it is the first day of expiry, which means that we will have a little more accumulation coming through when it comes to not only the November futures but the December futures too. And it's the same for the Nifty banking futures, considering the fact that we're seeing some weakness in the Nifty banking index, largely on account of the weakness in Yes Bank. There has been more accumulation open interest. Again, the India volatility index is advancing, but that's less than 0.5%. It's a lot lower than what we saw in the morning. And in fact, in the morning, we had seen that mark about 20. Now it's come off and now inching towards 19. So, well, perhaps some respite there. But coming down to your levels, what we're watching out for right now is essentially the 10,000 mark. The 10,000 put has the maximum open interest right now, and that's where we are going to see a lot of sort of support coming through. Should that break, well, we're likely to see, you know, some concerning levels such as the 9,800, 9,700 levels, according to analysts, according to technical analysts. That said, that is also the most active option when it comes to calls and puts. That's the 10,000 mark right now. But moving on, let's talk about some stocks. And you know, you guys have mentioned Ujjivan Financial, which is under severe pressure. We've seen a 48% increase in open interest towards shorts. Yes Bank is the other one from the Nifty 50. And that's where we're seeing another 6.5% added towards fresh shorts. Titan, on the other hand, is advancing in trade today, and we have seen gains coming through longs there. And Mindtree from the IT space, again, really under pressure. It's lost, well, as much as 25% from the day it announces earnings now. More shorts coming through, so some pressure there as well. So mixed cues in the broader markets when it comes to benchmarks, while trading marginally in the red for now.
All right, Agam, thanks a lot for that.
Agam, we want to stay on as well because ITC numbers are probably out as well. But just before we get that going, UPL is the other one. Which numbers have come out?
I think Yash is already mic'd up. He's here to dissect those numbers for us. Yash, quickly run us through UPL's numbers.
So they were largely in line with estimates, or actually higher on several counts. The revenues have come in at about 4,257 crore rupees, which is a 13% growth on a year-on-year basis. The analyst expectation stood at about 4,140 crores. Net profit, that has come in lower at 270 crores as compared to the expectation of 386 crores. Now, this is in part of an exceptional loss of 52 crores in the current quarter, and also a high other income of 76 crores in the base quarter, on account of which we are seeing that lower number. But however, operationally too, it was a strong quarter for UPL, a 17% growth in EBITDA, coming in at 839 crores, again higher than the expectation, and margins at 19.7% are largely in line with the expectation. We'll have to wait and watch for more details once the management comes out with the press release.
Okay. Yash, thanks a lot for that. I think ITC numbers also out on your screens. The profit numbers higher than what our expectations were. We were holding on to a number of closer to 2,879, and the profit has come in higher than that. Revenues at 11,270 is also something that's come in slightly higher. Agam is here. He's going to dissect those numbers for us.
Yeah, these some numbers are certainly higher than expectations. I reckon because of this, we're likely to see margins come and see an expansion of nearly 200 basis points. I'm still going to wait for the margins number to show up. But considering your revenue number is higher than 11,000 crores, this is much higher than, as much as 300 crores higher than what we were working with. And again, your profitability, that is also slightly higher than what we were expecting. It's turned out to be a quarter which is better than what the consensus was working with. Now, just a couple of very critical points in ITC. One is that it was essentially the cigarette business which was expected to do well, and I reckon this is largely something that's been providing that boost when it comes to your top line. And considering the fact that there were no changes in GST rates, well, that means that there were no price hikes, and when there are no price hikes, it means that volumes are likely to rise. It's possibly after many quarters that we will likely see a considerable increase in volumes when it comes to ITC. So far, we've just seen an uptick of around 1%, 2%, no more than that. This time around, this number is likely to be higher. Of course, the company does not will report the cigarettes volumes. And the other very critical aspect in ITC's earnings will be your growth in your FMCG business, and that is going to be another crucial area, considering the fact the company has put in so much when it comes to
couple of things. The cigarette revenue is up about 10% on a YOY basis.
Yes,
how does that look?
That is excellent, Neeraj, because if we go with no price hikes at all, that means that your volumes growth will be anywhere between 5 to 6% on the higher end of our expectations of around 6.5% or 6%. So this certainly is a very big boost when it comes to the cigarette business. Of course, the majority of your revenues come from the cigarette business, but I'm also keen on watching out for what we get from the FMCG business, because that's where we were expecting an uptick of anywhere between 10 to 16%. If we do see that, there'll be higher, much higher than what we've seen for HUL in terms of growth, and that again is going to be another very important factor to watch out for. So, well, as soon as we get those details,
I'll just put out some more numbers for you.
Sure.
So we've got the cigarette EBIT up 8.7%, the EBIT margin at 71%, revenues at 5,026 crores.
Right.
And the overall EBITDA margin at 38%.
Yeah, so I'm a little curious about the EBIT margins. You usually have EBIT margins for cigarettes around 66, 67%. Considering we've seen the cigarette EBIT margins now higher, the EBIT margins now higher at as much as 70, well, again, it's something that is going to provide that boost for ITC going in. So, well, again, I'm going to wait out for details. I'm really curious about the FMCG business, because that's where we're going to see a change and a big turnaround with respect to ITC, as analysts put it, over the next couple of years.
Just stay on, Agam. I think we've got Tejaswini Kumari of IDFC Securities also joining us on the phone line. Tejaswini, optically, from these numbers, how have you read into the ITC's quarterly performance?
I'm just looking at the numbers. So can you just...
Yeah. Okay. So let me try and give you the numbers, Tejaswini, if you want. I think the revenue numbers are at 11069. The net profit has come in at 2954 versus the 2640 crore mark. These couple of names, maybe an initial comment. I'll give you the EBIT numbers in the meantime.
Yeah, so actually it looks like in line with estimate on the sales front and EBITDA. Net income we were expecting around like 2640, you said, right?
640 is the comparable number, Tejaswini. When it comes to your profit number, it's a little over 2,900 crores.
And I have the EBITDA number, EBITDA margin, which is at 37.3%.
Yeah, so I think EBITDA, there's a bit of miss in EBITDA margin number, but otherwise numbers look totally in line with the estimates. So I don't see any variance as per se, and segmental number actually.
Yeah, well, let me try and give you the...
Agri is up 10.6, paper is up 8.6. So there is a growth in both these segments as well.
Yeah, so we were expecting around like a cigarette segment also, we were expecting around 9-10% growth, almost 11% gross growth actually. So that also looks in line only. And like FMCG, we were expecting 15% growth. If I see the FMCG EBIT numbers, that looks good actually. Like on a YOY basis, it's around 50.8. Yeah, so on YOY basis, it's a huge jump. So overall, the FMCG others numbers, which we were actually looking at, that looks a good improvement. And on sequentially it's particularly flat, but on YOY basis, it's seen a huge jump. So that's a good positive.
Yeah, I've also one question. I'm just looking at the BSE press release. The cigarette revenues for the 3 months ended September are at 5,026 versus 4,554, which is about a 10.36% growth. How do you look at that number?
That number is like, I think it's in line because we were expecting gross level approximately 11% growth. So it's approximately 10.5% growth they have given. So it looks in line. I don't have the cigarette volume numbers, but we were expecting around 7% volume growth because there was a decline of 6% in the base quarter. So that seems to be, I think that should be the case. 7-8% volume growth should be there in the company for cigarette. So that
let me just come in on cigarettes specifically. Now you suggest that we've seen about a 10.5% growth in terms of revenues. Your estimates were a growth of as much as 7% in volume. So considering we've seen about 10.5% growth, do you think that your volumes will also be largely in line? Because the estimates that we are working with respect to cigarette volumes is anywhere between 3 to 6%. If you say that it's 7% volumes, that means it's much higher than expectations. So that I want your comment on that. And the second part here is that should we see no more changes in taxation when it comes to GST over the next few months, does it mean that the third quarter is also likely to see this impact come through for cigarette volumes as we move in?
Yeah, see, the thing is that for this quarter and the coming quarter, the base is very favorable because in both the quarters, the company had witnessed volume decline. So, like for 2Q, there was a decline of 6%, and for 3Q, there was a decline of 4% in the cigarette volumes. So we won't expect, if I say a 7% jump for this quarter, there should be only if we see a 1% growth would be there if we just neglect the decline. So I think the cigarette volume should be broadly in line, 6-7%, because the company has obviously taken price hikes post the GST implementation. So I think for this quarter and the coming quarter also, we should see cigarette volume growth. But on an overall annual basis, I am not considering any kind of cigarette volume jump for this year. I am considering in the next year only, FY20.
Right. Tejaswini, just a final question on FMCG. Again, what we saw was about 11% growth in your FMCG business. That is excluding cigarettes. Your comments on that, your thoughts on that, is that number also in line?
No, for that number, I would say I was estimating around 15% jump. So 11% is a bit lower on that front. But if I see the EBIT growth, that is I would say that because sequentially it's flat. So I would say it is encouraging, but obviously we should see some more growth going forward in that number also.
Right. I think, Neeraj and Devina, that is the critical aspect because this quarter was not about cigarettes. This quarter was about its FMCG business. And as Tejaswini has mentioned, we've seen a sequential flattishness coming through, which means that it has not performed as per expectations. It's at the lower end of the expectations, is within the range. But considering we've seen 11% growth, the higher end of the range was 16%. That's possibly what the street is now worried about with respect to growth prospects. And that's possibly the reason why the stock is down by as much as nearly 4% right now.
Okay, Agam, thanks for putting that into perspective. Tejaswini, one final question. In light of these numbers, what's your stand on ITC as a company? And would you choose ITC or some other FMCG name, or do other names find preference?
See, I have a buy rating on the company because obviously the stock is not performing as in sync with the other FMCG players. And if we see the valuation, it's pretty cheap. So we value it on SOTP basis, and we have a target price of 356. So, and we are estimating cigarette business at 28x only for on PE basis, which is very pretty cheap if we consider other companies. So I think it will be a buy, but obviously we need to see the improvement in the FMCG business because that is the only trigger which will lead to re-rating of the stocks going forward. So that remains a concern, and that is one point we need to keep an eye on. But overall, we prefer the company, and we have a buy rating on the company.
All right, Tejaswini, we'll leave it at that. Thanks so very much for joining us and breaking down those numbers for ITC. So a disappointment on the FMCG front, expectations on the higher side of 15%, coming in at 11% in terms of the growth rate. 278 on ITC, down about 3.25%. Well, on to another segment, and that's the oil and gas space. The last few months have been turbulent, to say the least, for the oil marketing companies. Rising crude oil prices and depreciating currency are likely to impact their September quarter performance as well. Well, if that was not all, the government's decision to ask OMCs to absorb 1 rupee duty has further dented investor sentiment. How is all this likely to play out this time around for their quarterly numbers? Let's ask all of these questions to Probal of IDFC Securities, who's joining us on the show right now. A lot of factors that we need to keep in mind, not just the crude oil prices, but what the government has asked the OMCs to do. In light of all this, should we expect much out of the September quarter?
No, I think, some of the things that really impacted the numbers basically happened after the 2Q results have closed. So, frankly, not too much of an impact is expected, at least in 2Q. If anything, at least on the marketing margins front, if you look at 2Q numbers, the retail fuel margins actually would have gone up by between 30 to 40 paisa. The thing that impacts the numbers, however, is that inventory gains played a pretty large role. If you look at the 1Q numbers, obviously the crude prices going up in a short period of time generally tends to benefit these companies because you have a large amount of inventory gains suddenly coming in the system. So for 2Q, inventory gains, while they still will be at much lower levels, and therefore the reported numbers on a QOQ basis will actually look fairly weak, despite the fact that, marketing margins are obviously going to go up by about 30-40 paisa per litre, at least for petrol and diesel.
So ex-inventory, you don't expect steady refining and marketing performance, or do you?
No, I think core refining margins actually disappointed quite sharply. If you look at 1Q, if you take out inventory, the core refining margins actually underperformed the benchmark Singapore margins by quite a bit. And one would expect that core refining margins, if anything, should actually improve a bit.
Right.
I mean, there were specific one-off factors for each company. IOCL had some issues which keeps on ongoing with the Paradip refinery. BPCL, the Kochi expansion still hasn't really sort of synchronized all the processing. And MRPL had some issues at the, HPCL had some issues at the Mumbai refinery. So we expect that some of that could actually improve a bit, and therefore core margins could be higher. But on a reported front, given the extent of inventory, you had $3 each for BPCL and HPCL, as much as I think $5.50 plus for IOCL. Obviously, that's not going to be replicated. So you're going to see refining earnings really decline quite sharply on a QOQ basis.
What would be one or two factors that you will be keenly watching out and the takeaways from the results that you want to keep an eye out on?
Well, frankly, two things. One is that outlook on refining obviously is very important because all of these refiners have spent a considerable amount of money either in enhancing the configuration of the refinery or improving, complexity of these refineries. And frankly, as I mentioned earlier, whether it's Paradip for IOCL or Kochi for BPCL, we haven't really seen that capex really reflect in the numbers, at least till now.
So and utilization ramp-ups probably.
It's not just utilization, it's more about product yield, it's about, the actual delivery of margins, which we still are sort of awaiting over FY19 and 20. I would love to have some clarity as far as when they start recovering back the 1 rupee that they have let go if crude prices softens. But I mean, realistically speaking, one would not expect a clear guidance on that front with this quarter results. I think that's something that's still some time away, really. If crude remains soft, and gets at $75 and stays there, then you can probably see subtly some recovery happening. But I would be amazed if they actually made a formal announcement that, at this price, we actually start recovering that 1 rupee once again. So those are the real, and of course, guidance on capex, because now that the profitability starts to really look stressed, whether they change their capex plans in terms of phasing, in terms of pacing, or anything like that, I think that will be important from a balance sheet perspective.
Interesting. If I look at what the Bloomberg estimates are, Probal, the reported numbers seem to suggest that the worst hit on the profits would be HPCL. The other two companies would have a slightly deeper gash on the net profit numbers. The question is, will the markets react to these numbers, or because of that 1 rupee cut and the sentiment change? I remember we had a conversation before that 1 rupee cut had happened. Back then you had said that, the market is discounting the marketing business completely. And then we've had this gash which has resulted in a further erosion of... and nobody could have anticipated this, to be honest.
Sure.
So my question is, are these numbers already factored in?
Well, I think 2Q really, realistically speaking, 2Q is something that is behind us already as far as the OMCs are concerned. I think the real issue really is when do they actually start doing any recovery of the marketing margins. And the other thing that has actually also been adverse, and this is not just for the OMCs but for the sector in general, is that refining margins have actually dropped below $5.50. If you look at average GRMs that have been there in October, they're actually somewhere around $5.2, $5.3. So, you know, it's a double whammy. Not only am I not making that much money in marketing, I am also suffering on benchmark margins itself. So 3Q and 4Q from that perspective obviously starts to look much weaker than it was 3 months ago. I think that's the bigger concern, and some of it is already reflecting. See, you know, when in times of stress or in times of uncertainty about political moves, what happens is OMCs get back to that range of trading between 0.8 times to 1.1 time book. The conversation basically shifts from looking at them as EV EBITDA players to price to book players. And I think that is something that we are really starting to you know, see in the space.
Already there, maybe.
I think, yeah, I mean, HPCL, if you really look at it, 240 rupees is basically close to 1 time book. And what we are seeing is as soon as every time it touches 250, you see a small pushback at 200, people will come in and buy. And that, you know, till we have some more clarity or some stability in crude prices, I'm afraid I think that looks to be the likely range for all the 3 players.
Is the crude, you know, throughput number, which is expected to be lower this time around, a concern?
Sorry, I didn't get
the crude throughput number.
No, I think refining throughput, frankly, on a quarterly basis, there could be some planned or unplanned shutdowns. As long as it's explainable by, you know, something that, some sort of a shutdown, I wouldn't be too worried about the throughput number per se. I think that's something that keeps on being volatile depending on, you know, what sort of maintenance cycle they have and so on and so forth.
So are you watch these stocks from the sidelines mode right now, or are you go out and invest in them at maybe 15-20% lower mode right now?
Yeah, I mean, I think, yeah, the second approach probably works better from a short-term perspective. Unfortunately, taking a long-term call on these stocks
is likely difficult.
Is very, very difficult. I mean, not that one doesn't have to, but at this point of time, you know, they remain, you know, very short-term trading plays, depending on what your call on crude prices is, which can change based on the next tweet from Trump, really. I mean, so it's very difficult to take a call on that.
Just the other thing is maybe not in the immediate term, but obviously now once Iran sanctions kick in, crude sourcing is going to become an important challenge. Do you see that as firstly being a challenge at all?
Well, the OMCs have stated that they have alternate mechanisms in place, and I would not be, frankly, I would not claim to be that much of an expert that I would know, you know, how they're actually doing the sourcing. But our understanding is that they do have other channels in place. If you really see over the last year, they've really worked on getting in place US sourcing arrangements as well. Not that it's happening in a big way, but that's something that is expected to pick up if the price divergence remains as significant as it is now. And I think the other Middle Eastern countries have really had negotiations. The government has had a lot of discussions with Saudi Arabia and some of the other countries to try and backfill whatever Iran crude that they will have to, you know, sort of really reduce. I think the critical thing to look at it is that unlike the last time, it seems unlikely that the US would look the other way or provide exemptions on a case-by-case basis, which is what happened the last time around, where you were allowed to sort of more gradually reduce your Iran offtake. If the US really is as strict about it as they are claiming to be, then I think maybe it can create some issues, not so much from a sourcing perspective, but from a cost perspective, because Iran's terms of providing crude were actually much more beneficial to our country. You know, they were providing some working capital benefit, they were providing some discounts, longer credit period. Those can get impacted in a tighter supply environment. So from that perspective, I think the costs will go up. I don't see a problem where they run out of crude to supply to the refineries. That would be too drastic, I think.
Okay, Probal, we'll leave it at that. Thank you so much for taking the time out and giving us your views. Really appreciate your time.
Thank you.
I was almost on the verge of asking Probal about Ujjivan and Equitas too, because those stocks are just right now the center of everybody's attention. But no, that's the oil and gas discussion, and watch out, all these companies come out with numbers come next week. By the way, as we speak, the market's fairly choppy, I must add. Just about a second ago, we were down about 0.9%, which is, of course, at in and around the low point of the day. But we have come off quite rapidly in the last 10 or 15 minutes of trade. And the Nifty Bank, for a change, is leading the charge downwards. Usually, we've seen the Nifty Bank behave better than the Nifty and the Sensex in the last few days. In today's session, banks have actually taken a beating, and 340 points down for the Nifty Bank. That is certainly trading at the lowest point of the day. Before we get in our technical experts to talk about what do the charts indicate for these indices, let's get in the chart of the day segment out of the way first. And Sumit Sarkar joins in with the chart of the day. Sumit.
So if you see, Wipro is the only stock in the Nifty 50 index that has managed to give positive returns ever since the benchmark started to fall off from its all-time high back in August 2018. Now, if you see here, this is the Nifty IT index. If you could load the Nifty 50 index, you can clearly see here how the Nifty 50 index has fallen clearly 14% from its high as of August 28, and among the Nifty 50 constituents, Wipro is the only stock that has managed to stay positive and give close to 8% return since August 28. Now, the two reasons behind this. First is that if you see right from the start of the year till August 28, Wipro was an underperformer and was the cheapest IT stock compared to its larger peers like TCS, Infosys. And analysts also believe that a potential buyback announcement could be one of the reasons why the stock has managed to buck this trend. Now, if you see in the last 2 years, that is in 2016 and 2017, the company has done a buyback of close to 2,500 crore rupees and 11,000 crore rupees respectively. And currently it has a gross cash balance of more than 32,000 crore rupees on its book. So potential buyback and a cheaper valuation could be the possible reason why Wipro has managed to buck the trend.
All right, Samit, thanks very much for that. That's the chart of the day for you. A quick look at, just some stock price performances before we bring in the management at Praj Industries. We've got Yes Bank at 7.5% given up. HCL Tech is down about 3.5%. So it's looking weak pretty much in all counts. And I just want to highlight a few index movers. ITC is now down almost 4%. Grasim is down 3.5%. Axis Bank, ONGC, Z, and BPCL down about 2.5% on the index. So these are some of the top 10 index losers right now.
Well, let's get in our technical experts on board and then talk about the movers and shakers before we get in some managements. Bala of cashthechaos.com joins us right now on the show with his thoughts on the charts, and a bit Brijesh Singh and others will also join in. Jay, good having you. Thanks so much for joining in. How are you approaching trade, Jay? We are twice today we've been on the verge of breaking into the 4-digit mark on the Nifty. How are you viewing the charts there?
Yeah, one thing, the markets in the extreme short term is stretched to the negative side. That doesn't mean the downtrend is ending or the correction is ending. It's still a sell on rise market. I would wait for some sort of a bounce to come in the extreme short term, and then look to short the market if you are already not short on the market. But if you're already short on the market, continue to hold on to it and use bounces to add to your positions. That's the strategy here. The nearest support for the Nifty is about 99.50, which is the 2018 low. When I spoke last time, I said that this is a large degree correction within our ongoing uptrend, and that price objective for this correction is about 9,700 mark, and that is still intact. There's no change in it. But in the extreme short term, we could see some sort of a bounce somewhere to the region of possibly 10,200 to 10,400, and that will be a selling opportunity. But once the market reaches around the 9,700 ballpark, or in fact, even as we speak right now, you should have your shopping list ready. When the market gets to those new lows below the 2018 low, that will be an ideal opportunity to position for investors as well as slightly longer term traders.
All right. Jay, what about the bank Nifty? I mean, like Neeraj highlighted, the bank Nifty up until now had some sense of stability and was outperforming the index in days where the index fell, as well as where the index rose. You had the banks pushing the index higher. Today seems to have reversed roles. What's the sense in the bank Nifty going forward now?
Yeah, that is also a sell on rise market, but selling at this juncture doesn't make any sense. If you look at the global picture as well as the Indian market picture, both are looking overly bearish in the short term. But I will still wait for some sort of bounce towards 25,900 on the banking index, maybe on a stretch to 26,600 as selling opportunities. The private sector banks are actually slightly better off than the PSU banks. The PSU banks are actually the dogs. They've been getting, and of course, along with the the Ujjivans and the India Bulls Housing Finance companies, they're getting thrashed, and that still continues to be the way. But the positive note is that they are all nearing the end. There's just one last leg for this downfall to happen.
Okay, Jay, what are the stocks that you identified for our viewers today?
Yeah, I have two. One is a cash stock, which is called Cupid, and this is a very interesting stock. It had a stellar run in 2015. It went all the way to 500 odds, and it's been correcting for 3 years in a very, very choppy fashion. This is an investment bet, and it's very unlikely to print 121.3. So one can place a stop below 120 and expect this stock to hit about 300 to somewhere about 550, fresh record highs from a 6 months to 12 months time frame. But you got to be very, very conscious that we are in the midst of a correction. So don't go and allocate your normal allocation. If you normally allocate X, you should be allocating X by 10 or X by 20 at current juncture. Because, as I said, in my index strategy, we still have one more leg of the fall. So during that fall, that will be the final low, and the market can come close to testing the supports and the stop losses. So allocate sensibly. The second one is a short-term call on divis. I'm bullish on the pharma sector, and place a stop below 1230 and expect 1400.
All right, those are some of Jay's ideas. Brijesh, let's start off with your index idea first, and then we take over to your stock ideas.
Good afternoon, Devina. See, no doubt the Nifty has still maintained a 10,000 psychological mark. It has not been broken. And the low which was made in the month of March 2018, that 9,952, there was a one-way rally from that to the level of 11,716. So I am looking that 9,950 would be holding on. And in the previous show, as I was been recommending, that Nifty looks weak on the chart, and we might try to touch 10,040 or 10,070, and from there onward we can see a pullback. So playing on that sentiment, I look like a buy on dip strategy right now. So keeping a stop loss of 9,952, one can go for a buy side for the Nifty and play for the target of 10,180, and the target can be extended to the level of 10,250.
Okay. That is on the index. Let's take a look at your stock calls as well. You've got a buy call on Torrent Power and a buy on KPIT Tech.
See, both the call on the shorter term time frame of chart, or say the hourly chart, right now they have given a bounce back, and the previous swing low has been hold on. So that indicates the buy side for this counter. If we talk about Torrent Power, the trend line breakout has been seen on the hourly chart. As I've said, higher lows formation, so it's giving a bullish sign. So right now it has been quoting at 226.5. So one can take a buy call with a stop loss of 220 and play for the target of 242. This I'm looking for the 2 to 3 trading session. Another call would be KPIT, as KPIT trade in a range of 200 downside, followed by 220, 222 on the higher side. So right now KPIT has been trading somewhere at 215, and it looked like this time 220 or 22 range would be breaking. So one can take a buy call below 215 or presence of 215 with a stop loss of 205 and play for the target of 228 and 230. This I am looking target achieving within 2 to 3 trading session.
Okay. Now let's talk about those 3 or 4 names that we should discuss. First, on to the newsmakers, the small finance banks. The Reserve Bank of India has clarified that promoters of the SFBs need to list their banking units within 3 years of operations. This is in order to comply with the regulators' licensing requirements. Now, if all of this sounds mumbo jumbo, I think the simple thing is this: both for Ujjivan as well as Equitas Holdings, which is down about 26%. And there's some very interesting data that we have for viewers as well. But I think what at least I made out of the conversation and the reports that have come out is that there's a holding company discount that comes in, because until now the small finance bank operations are within the listed entity. Eventually they'll be listed separately, and because it can't be a 1:1 IPO, and some shares have to be held by the parent company as well. So it's not that shareholders get 1:1 shares, and therefore the parent company in which you or anybody else who has bought shares of Ujjivan and Equitas are shareholders of will have to bear that holding company discount. And that has put paid to any kind of uptick hopes, because these stocks were not expensive by any stretch of imagination compared to some of the other NBFCs. But this really puts them in a perilous position as far as valuation parameters go, and therefore not surprised that this is what's happened to the stock. We kind of spoke about it in the morning with the guest as well, that it was expected to go down. Yeah. I don't think too many people anticipated a 30% downtick, but it's happened.
Of the cut. But nonetheless, I mean, for the management of Equitas to say that, we will probably go back and appeal to the RBI to let us merge. I mean, if you have the circular dated January 1st, 2015, which clearly states that you have to you list your small finance business, your small finance bank, then what makes you think that the bank will...
and the RBI reiterating it.
Yeah, and reiterating it, and then you still have hopes that the RBI is going to let you merge it back. I mean, that is wishful thinking at their end, probably. I mean, he said that it's probably not that big a deviation from once they actually do it. they can probably delist and merge it back. That's what he said.
But yeah, but if only life was so simple. Yeah, Clearly the market has not liked it, Devina, because the numbers, sorry, you were saying?
No, I was just going to highlight how the performance of these stocks have stacked up once they listed. So both these counters, Equitas as well as Ujjivan, and those figures should come up on your screen. So Equitas listed in April of 2016, Ujjivan listed in May of 2016. Both these stocks listed in 2016. Issue price for Equitas was closer to 210 and it listed at a price of 227. The stock currently trades at about 170. It had hit a live high of 547 and look where it's trading now. Equitas, on the other hand, a listed issue price was 110. Opened Equitas. Yeah. That opened at 144, live high of 206 and now trading at 85. So that's the kind of cut that we've seen on the stock. Also, today's session left aside just the general carnage in the market. None of these stocks have been spared. So Ujjivan has been coming off steadily, and today's downfall has probably hit the hammer on the nail.
Yeah, it has certainly looked wobbly in the session. Mr. Chokkalingam, G. Chokkalingam of Equinomics with us as well. Mr. Chokkalingam, for anybody who's watching this and probably had those shares and has not been able to get out, would you believe that even now is a good time to get out and maybe park the money somewhere else? Or would you believe that the damage is already done? I mean, the question is not about necessarily only about whether there is further damage or no. The question is also about whether there can be a recovery or no.
There can be some recovery. Now, what is happening in the market, there is no liquidity and there is no confidence among the majority of the investors. So there has been a panic reaction. Not only these stocks, you saw other day HPCL cracking 30-40%. Subsequently, they also recovered substantially. So this is not the day to sell any of these stocks. One should hold. I'm sure there can be at least 5-10% or 15% recovery. At that time, they can take a call on the basis of the fundamentals.
Okay, so, but I'm guessing you're not a buyer, Mr. Chokkalingam?
No, I stayed away from microfinance companies.
No, now.
My logic is that there are some regional banks, in the business for 8 to 10 decades available at a discount to adjusted book value. So I would prefer to continue to buy those banks like Karnataka Bank, South Indian Bank, instead of buying these microfinance holding companies at higher valuations.
Okay. Fair call. So that's on Ujjivan and Equitas. Jay, would you be able to trade them at all? Or is the damage already done? Or you could play contra as well?
I think, see, last time when we spoke, we discussed Edelweiss and said definitely this is not the bottom for it and it's gone lower. And the same goes for Ujjivan. There is a bounce coming, but the problem with all these bounces is that they are all counter trend, and counter trend bounces, they can dissipate rather really quickly. If you aren't actively tracking them, you should not be trading them. Wait for the final lows to come through. I think they are very close. As I said earlier, this is the final leg of the descent for them. And once that is done, I think once the index goes below 9,700 mark, I think you're going to see these stocks bottom, and probably these will be the first to see a ferocious bounce back. But until that point, you need to avoid these stocks.
In fact, Edelweiss, I just want to highlight the earnings of Edelweiss, because this time around, up until Q1, we were talking about how 21 consecutive quarters Edelweiss has given you quarterly performances and growth rates that have really excited the market, and this time is no different. They've reported a 53% jump in their profit numbers, coming in at 276 odd crores. They had reported 180 crores on a year-on-year basis in the same quarter last year. Total income for Edelweiss for this period grew to 2,672 odd crores. So performance-wise, there seems to be nothing missing from Edelweiss. The stock's trading at an upper circuit this afternoon, but we had Santosh Singh in the morning, and he spoke Neeraj about Edelweiss, and he said that the concern here obviously is that it's become more of a financing company. It's no longer a brokerage company, and the LAS is something that's creating a little bit of a stir in the market. The loan against securities, the big positions that they have there, is something that's concerning the market.
Yeah, it is. The stock has bounced back. Well, today, Mr. Chokkalingam, in any of these names, are you a buyer? The stocks which have fallen quite a bit, say in Edelweiss, I'll throw in multiple names there, Edelweiss, Probal Enterprises, maybe a Jubilant FoodWorks.
No, I stayed away from most of these, lending companies, including microfinance, Probal Enterprise. Now I am staying away from even companies related to, the wealth management or broking business. Because, as we are in the same business, we understand the kind of stress in the business. So there would be, in the medium to short term, some more pressure for these businesses. So I would stay away. I looked at the Jubilant. After the correction, it looks slightly attractive now. But still, considering the fact that there has been a huge valuation contraction across the board, including even the names like Asian Paints, for Jubilant Food, I would still wait for a little more correction before I buy, because it still trades at around 45 PE on the current year expected earnings.
Well, actually on that one, Brijesh, Jubilant FoodWorks, it's flattened completely today. But I just bring up the intraday of Jubilant FoodWorks before we get to Brijesh, because remember the stock the last few days has been in a bit of a corrective mode. In today's session has bounced back from those 5% lower levels. How would you trade this one?
See, right now, if we check about the daily chart, today's candlestick has been a doji, and generally doji represents the reversal pattern. When the trend has been down and when the doji candlesticks form, one candlestick, that is known as a reversal. So keeping that thing in our mind, so the today's low of 987, it holds on. Then the chances are that we can see a sharp pullback. Now the sharp pullback can be till a level of say 1150 to 1170 zone. So right now at this juncture of 165, I would not be buying because the risk reward ratio would not be in favor. But anyhow, in coming days, if it trades somewhere around say 1030 around, then definitely 985 can be kept as a stop loss and play for the target of 1165 to 1170 or even 1200 can be seen on the chart.
Okay, that's Jubilant FoodWorks. Stocks at 1,066 right now. Some other names then, and just to quickly take a look at what's been happening in the mid-cap and the small-cap space. Indiabulls Real Estate is down 5%, Shree Infra is down 5%, United Breweries is down 4.5% at 11.15, I believe. Repco Home Finance 3.7% lower. Walk Hard, M&M Financial down 3.5% as well. Choka, anything in the housing finance space, the likes of a Canfin Homes? I mean, the results were fine for Canfin Homes. In fact, it was it shot up almost 10% post results. Repco Home Finance, and even for that matter, Indiabulls Housing Finance.
Yeah, throughout this year, we stayed away from both NBFC and housing finance companies. We didn't have a single stock. We avoided microfinance companies as well, small bank as well. But you are right. I mean, there has been a severe correction. This is a time to slowly start looking at this space. So within the housing finance, I would like PNB Housing. After steep fall, it looks very attractive in terms of valuation. I do believe that eventually PNB would divest the stake in PNB Housing, and that would be positive because I am sure some private entrepreneurs could acquire this housing finance company, and they can improve further the growth rate. So in the entire pack, I would start looking at PNB Housing quite seriously.
Okay, PNB Housing is what Choka is liking. Anything else, Choka, that's on your list of stocks?
Yeah, there are a lot of stocks. Difficult to find investors with the cash, but easy to find a lot of stocks. We continue to buy three stocks, namely, Bombay Stock Exchange. At current price, it gives you 6% dividend yield. The free cash is almost 80% of the market cap. So I believe in the bear market, this kind of stocks unlikely to fall very drastically. The second one is Jai Bharat Maruti. It's almost down 55% from the 52-week high. Joint venture of Maruti and trades at a single-digit PE. In the last 18 months, it has increased the gross block by about 58%, mostly through internal accruals. It has set up a new plant in Gujarat to cater to expansion project of Maruti. So this is another stock I like. Third, Andhra Sugar. Though the name is sugar, 90% of the profits are coming from chemical, industrial chemical and caustic soda. In the last 1 year, the Andhra Sugar has expanded the capacity of caustic soda. They set up a captive coal-based power plant. They have expanded capacity of aspirin plant, which has got US FDA approval. And this company has been giving dividend for 50 years without any interruption. And again, trades at around 8 PE. And stock is down by more than 50% from the peak. So this is another stock which I feel can create a significant wealth in the next 2 to 3 years.
All right, got that. Chokka, we'll leave it at that. Thanks so very much for joining us. Appreciate you taking out the time. Just to highlight a few of the stocks that have been making their moves in the last 1 hour of trade, I think UPL has seen a sudden sharp move on the upside. I should have that stock up on your screen. So at the highest point of the day right now, 3.5, almost 3.8% higher right now after seeing that initial cut post the numbers came out. That's UPL. Hindalco's also moved up, but not to that great an extent. I think it's just UPL that has seen a significantly sharper move. Hindalco trades higher by just 0.25% or so. Jeb, what would you do with the Reliance Industries now at 1,050?
Yeah, Reliance Industries has got a very strong support around the 1,010 and 990 mark. So, given that it's come very close to those levels, I think it's looking pretty interesting. From a longer term chart, I think it's still looking like it needs to make one fresh record highs, and that's in confidence with my overall index view. So if the stock were to drop somewhere close to, 1,010 to 990, I think that'll be a very interesting entry point for a medium term investor as well as a longer term trader. But even the bounce, as I said earlier, that's likely to be a bounce back. I think Reliance could bounce much more than the other stocks, being the index heavyweight, and that could be the leader to carry the relief rally somewhere close to 10,200, 10,400. So place a stop below 990. If that's affordable, you can even trade for the short term.
Okay, Jim and Seon, so much more to talk about. BEL, the results are out on your screen. The EBITDA margins have looked strong. 25.3% versus 24%. EBITDA up about 44%. So strong growth coming in for BEL numbers. The stock is spiking a bit. We'll get in a fundamental view from Siddharth Sedani after this break on BEL. But while we are at it, can I just get a quick chart check on this one, Brijesh, BEL?
So on an immediate basis, 85 is a support. It should hold on the 85, and chances are that the stock might try to touch 92.5 to 93. And if 93 is being crossed smoothly, then the major resistance level lies at the rate of 99 to 100. So chances are that once 92.5 or 93 has been crossed, we might try to touch 99 also.
All right. That is a call on BEL. I believe Dr. Reddy numbers are also about to come out. But BEL numbers are on your screen. We should just wait and watch to see what Dr. Reddy's initial numbers are. The stock, though, should have that up on your screen. Dr. Reddy is trading higher. Okay, there's a spike. The net profit for Dr. Reddy has come in at 500 odd crores.
That should be that's a better than expected number, Devina, I think, because the numbers were, I was looking at the best of the estimates, they were sub 400 crores. So I think this number of Dr. Reddy's is better than what we probably were
345. 345 was our estimate for Dr. Reddy's net profit. So that's come in significantly higher, at least on the profit side. Revenues were expected to move up by 7%. We don't have the revenues coming at 3,800 crores. Our expectation was 3,783 crores. So in line on the revenue side, but the profit has really seen a significant uptick and an outperformance there from the expected number. Margins also should come up shortly. We were expecting a number of 19.3%. So versus 19% earlier on. Remember, this time around, there was an expectation of the lack of Suboxone sales to affect the sales number, US sales number. We'll have to wait and see if that has seen any sort of an impact or no. Pricing pressure was something that was the other factor that was probably going to be a little bit of a negative for Dr. Reddy's. But looking at it, the consolidated net profits are definitely a much higher number at 503 odd crores for this quarter.
Seems to be above par for sure. Let's wait and watch what the internals are. Darshan should be joining us any moment to talk about how the quarter has shaped up to be. But from the looks of it, at least on the bottom line front, it's well and truly above estimates. Again, I think it's also a surprise because brokerages by and large had expected a subdued show, and the range, as I said, was sub 400, 330 to 370 was the range. The Bloomberg estimate, I think, was about 345. And because of there was a lack of meaningful approval for any kind of new products, the effect of Suboxone, as Devina said, based on the US courts as well, was likely to weigh in. That the firm has managed to do well on the bottom line front is credit. The EBITDA margins were seen to be declining to about 19.2%, broadly between 19-19.5%. I think
it's come in at 22.8, so that is also an increment much higher than the street expectation. And EBITDA itself, where we were expecting about 732 crores, they've reported a number of 864 crores.
Okay, Gaurang Shah, I'm told, of Geojit is with us on the show. Gaurang, good having you. Thanks so much for joining in. There is a bit of an EBITDA surprise out here, Gaurang, EBITDA margin surprise, which has led to the bottom line surprise as well. What do you make of these numbers?
So I think there should be meaningful turnaround over a period of time, and we all know that Pharma has gone through difficult times, and my sense is that, and let me give a disclosure, we do have a positive coverage on the company, and we feel that as resolutions come through, you will see much better days in times to come, and the negativity on the entire Pharma should be a thing of the past.
Were you wanting to watch out for from these numbers? Because on most parameters, so revenues are in line, profit is higher than street expectation, EBITDA margins, everything is beaten street expectation. So anything in particular that one needs to watch out in the fine print now?
I think what we need to look out for is the commentary from the management in terms of the businesses as far as US market is concerned. And of course, with respect to the resolution, my sense is that there should be some amount of positivity as far as that is concerned, because over the last 2-3 quarters, the negativity on the US business and inability to scale it up and resolve issues was something that was actually an overhang on the stock.
All right, the North America sales, Gaurang, have actually declined 0.4%. Was that something that you were working with?
We knew that the overseas business was a drag, and we did not expect much out of the numbers that has come out. But yeah, there is signs of improvement, and I guess in the next couple of quarters you'll see much better numbers as far as the overseas business is concerned.
The global generics growth also is about 7% that's come in. What would you do with the stock now, Gaurang?
So we do, like I mentioned, we do have a positive coverage on Dr. Reddy from a long-term point of view, and the fact that, the stock has corrected sharply, I think one should not expect any kind of short to medium-term miracle turnaround as far as the stock price is concerned. But yeah, with a 1.5-2 year plus, I think there should be significant improvement.
Okay, Gaurang, we'll leave it at that. Thanks so much for joining in and giving us that perspective. Just a quick perspective on the charts as well, if there's a trading opportunity available as a result of these numbers coming in. Bala, Dr. Reddy's on the charts.
Which stock is this?
Dr. Reddy.
Oh, Dr. Reddy's. Yeah, it's in a very strong place, but the rallies aren't taking it much higher. Continue to maintain a positive view, but it's better off trading the stock once it crosses a 52-week high. Until that, the stock as a whole, it's but from a medium-term perspective, the stock is much stronger than what it is in the short term.
Okay, gentlemen, stay on. So much more to talk about. We'll take a quick break on that note. As we head into the break, one more set of good numbers. Praj Industries, and hear out what the management had to say when I had a chance to speak to the MD and CEO Shishir Joshipura, and begin by asking him the factors that have led to the expansion in margins.
Yes, so Dheeraj, it's been a good quarter for us, and I think this is indicative of the momentum that is building up in the sector in general. We are very happy with the progress that we have made, and what you actually see is a leverage effect that is kicking in because of the fact that we have done a very, very tight job of managing our costs when going was not good, and I think that leverage that is coming in now with volumes available and the fact that we enjoy a very significant market share in this business is helping us to post the results that we have posted.
Is it also pricing which is helping you? I mean, how is the pricing scenario looking now? Because I know that your order books would be full with people doing a clamor for making ethanol equipment machinery manufacturing. Is it coming at a better pricing?
I think it's a mixed bag in the sense that, there is also a question of viability for a job in terms of when a project is put up, at what project pricing or cost it becomes viable. So I think there is a restricted ability to price it up. But I think what's very important is that, A, we are able to bring in innovation in the play, which is what we are aiming to do as we go forward. And that is when we start creating higher value, we are sure that we'll be able to capture higher value with our customers. Also, the business is just not, numbers that you see is not only the ethanol business for the domestic market. It is also reflective of what we are doing in the export front. It is also reflective of what we do in other lines of our businesses. So I think what you see is a cumulative result of effort of all our businesses.
Interesting. Actually, can you split it up for me? Maybe in Q2 or the first half of this year, or maybe the target that you have for the year as a whole. What's the split between domestic and exports thus far? Mr. Joshipura?
So we will look at a figure between our domestic and international business. Between something like 74% of our business comes from domestic markets, and 26% will come from export markets.
And is the current order book, I would want a number there if you can share, I'm sure you can, the number that you can share for the order book, and whether the current order book is also placed that way, that about 3/4 of your order book is domestic and maybe 1/4 is exports?
So our order book is about 900 crores right now, in which we are looking at a similar split, more or less.
Sorry, a 50-50 split you said?
No, I'm saying similar split, the 74-26 that I told you earlier.
Okay, the same split. Okay.
Yes.
And Mr. Joshipura, what's the execution timeline for this order book? Is this the highest order book that you've had in the recent past?
I think we have seen similar level in the past, very close to these numbers. But as we see it, the policy came up somewhere in the end of first quarter for the ethanol market. And we are seeing a good build-up. And as I've said in the past as well, that we are seeing an extremely good build-up of the inquiry inflow, which is of order about 35-40%. And we strongly believe that as we move forward, we'll continue to build on this base. So maybe this is a new base for us from where we will build the further order book.
Okay, and just typically what would the execution timeline be for any such order that comes into, 900 crores, yes, but would the execution timeline for the current order book be about 12 months or maybe slightly more than that? Can you give us some color there?
The order book, of course, the different businesses have different cycles, but fundamentally speaking, we are looking at an average about around 12 months.
Around 12 months, okay. Now, just before I come to the bigger discussion, just one last question on the current quarter and the outlook ahead as well. Your margin expansion at 6.8%, is that also the new normal between 6 to 7%, or would you presume that there could even be a possibility of taking it higher?
Yes, we believe that this is the new base from where we build forward.
Okay, so about 6 to 7% for the year as a whole. Is that a safe assumption?
Yeah, that's very, very safe.
That's safe assumption. Okay. Now, you would have expected this question from me, this new policy for ethanol. 2 or 3 questions really, Mr. Joshipura, and you would be able to give us the best color. One, whether the set of orders that are coming in from the existing players, which is the existing sugar companies alone, or are standalone players who are not necessarily sugar manufacturers but setting up ethanol plants are also giving in large orders. I know of one company like that in Punjab called BCL, which arguably has placed a 100 crore order with you, and please correct me if I'm wrong there, but what's the split looking like out here?
I think the majority of the current capacity proposed to be put up still belongs to the mother industry of sugar industry. I think they are best placed to deliver because of the fact that the feedstock is available at doorstep, is captive, so they are able to correct some of the other grades of feedstock, the B molasses, sugarcane juice. I think in almost immediate future, a sugar company is obviously very, very nicely placed to leverage what they have. So we also see the same thing that most of our exports are from the sugar mills and not from standalone plants, if you can say. So on the other hand, if you look at the 2G technology, then it is completely standalone because there's an OMCs which are putting up that plant. So there is no, because the feedstock is not connected to production of sugar, right? So that's a very different landscape. So depending on where the natural feedstock facility lies, I think we are seeing initial capacities being put up or proposed to be put up.
But so what's the split there? I mean, can you give us some color there? Is it possible?
I would say 95% of the inquiries today are from sugar mills.
So orders and inquiries both, 95% are still from the sugar companies. It's a very small minority from the non-sugar players.
And it can come in any form in terms of expansion of a brownfield capacity or a completely new capacity being set up.
Okay.
But the feedstock remains the primary determining factor.
Good news, guys. Got a promotion and a damn good raise.
Congrats, beta.
Congrats, मेरी तरफ से भी.
From mama too.
वाह, raise? अब तो इंश्योरेंस पॉलिसी ले ले.
इंश्योरेंस? कौन सी कंपनी से लूं?
सोचना क्या? चूज वही जिस पर हो पूरा भरोसा.
वीरू, go for convenience. My company is online, quick and simple.
बेटा, but policy समझाएगा कौन?
वेबसाइट पे सब है पापा. I can even call and ask.
क्लेम सेटलमेंट का रेशो क्या है? मेरी कंपनी का 98% से ज्यादा है.
That's good, but आज की generation wants everything online. Easy premium payment options, loan facilities और wide range of products.
अरे पापा दीदी, I will decide. Just send your links now. तुम दोनों भी ना. Same choice. LIC.
LIC trending with times. 62 सालों से हर generation की पसंद.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Back with countdown right here on Bloomberg Quint, about 1% lower. We are now back to being very close to the 10,000 odd levels. 10,028 currently, just 28 points shy of breaking into the 4-figure mark. Just bring up what the European indices are doing right now and what the world market and the Dow futures as well, because remember, Dow futures at the start of the show were trading with a bit of red. There's a deep gash of red across the European bourses, and the Dow futures about 1% lower. So from 113 points down at the start of our trading day, they're now down about 278 points. So the world markets aren't a happy place. Well, certainly seems to be a right reaction to what's happening and as to what's happening in our markets as well. Before we get in, a quick thought on the index. Let's find out what's made it to Yash Upadhyay's list of the Fab 4 stocks of the day. He joins in right now with that. Yash, good afternoon.
Good afternoon, Neeraj. So L&T Technologies is the first stock on my list. It's up almost 7% after reporting a good set of numbers. Revenues at almost 1,200 crore rupees is a 41% growth on a year-on-year basis. Margins have expanded by almost 300 basis points, and net profit has grown. There has almost grown by almost 55%, coming in at about 191 crore rupees. Jubilant Industries is locked in an upper circuit of 5%. Promoters putting in money is always a positive. They are looking to infuse as much as 45 crore rupees via preferential issue of equities and warrants. Kajaria Ceramics gains for another day. It's up for a third straight day, up 6%. The numbers were largely in line, but what the street is looking at is the management commentary, which has been very positive. They are expecting a 14 to 15% volume growth for the remainder of the year, and despite higher gas prices, they are expecting margins in the range of 16% and above. The last stock I want to leave you with is Kridan Infra. That one's up about 3% after the company's subsidiary received 167 crore construction order for the Purvanchal Expressway. Back to you.
All right, Yash, thanks very much for that. So that was Yash's list of Fab 4 stocks. Kajaria Ceramics is one stock that Yash highlighted. The numbers came out yesterday and the stock was up closer to 4% in yesterday's session. Today as well, carrying on the good momentum. So in the last 2 days has given you gains of closer to about 10-odd%. The other name, obviously, on the index right now, in fact, if you were to see, Yes Bank is closer to 9-odd% lower at 180. So that stock's not doing all that much. But I think Neeraj,
Axis Bank, Devina, I think in the last few minutes has slipped quite steeply. Will come up on your screen. Yeah, just okay, not too steep, but not the last 2 minutes. The last 10 minutes, Axis Bank has come off quite rapidly. It's now the second worst performer on the index. IndusInd Bank too, by the way, is down about 3%. Kotak Bank 2.5%, and maybe that is what is leading the Bank Nifty lower, Devina. So about 1.5% lower, 400 points, and that's dragging the index along with it.
Jay, I know you gave your call on the Bank Nifty, but for the components, I mean, if you have to take a look at IndusInd Bank and Axis Bank and Kotak Mahindra Bank, within this pack, is there a shorting opportunity right now?
Yeah, that's true. The banking pack is a very diverse pack. ICICI and ICICI is probably the strongest, but there is probably a shorting trade in Yes Bank. Yes Bank needs to break below the October low. And I think the price objective remains somewhere close to about the 170 mark for this leg of the move. But given that it's so markets are so one-sided, you got to be very quick in this trade. Even though the slightly higher time frame we are heading lower, it'll be better off to wait for a bounce to short them. But they still remain sell on rise on this market.
Siddharth Sedani of Anand Rathi is also joining us on the show. Siddharth, good afternoon to you. What's the positioning at this juncture?
Good afternoon, Devina. Yeah. Overall perspective, of course, yes. Overall perspective, it seems like market to an extent still looks little weak from here on, because stock-specific actions are there on the earnings which are coming by, and wherever there is a small little miss also in the earnings, I think the stocks are getting hammered. Of course, let's not forget that some of the earnings had been really very good, and on that outstanding performances, markets are giving thumbs up also. I think those are the companies where one can keep the accumulation strategy going in a staggered manner.
A couple of numbers, or 2 or 3 numbers that have come out. Siddharth Sedani, one of them is BEL. Just minutes ago, the numbers came out. The stock is up 6%, good profit growth, good margin expansion. Do you track that one?
Well, Neeraj, we don't have a coverage on BEL, but yes, I completely agree to your point that in terms of margin expansion, it has come to 25%, which is quite substantially well. And well, we know that this company happens to be a good performing company. But the biggest thing would be the defense orders which the government will be passing on. Of course, there are a lot of private players which are there in the anvil for getting good orders. But Bharat Electronic, being the strong defense play, historical good performance, it's a quality company to be in.
Did you happen to get a chance to look at the numbers posted by Dr. Reddy's, UPL? They just reported numbers, as well as ITC. So the 3 Nifty companies that just reported their numbers in the last 1 hour.
Well, ITC and Dr. Reddy happens to be good numbers in terms of growth, in especially volume growth in terms of ITC, which they had posted. I think that happens to be good, little ahead than the expectation of the industry. Where UPL, I think it's a miss on the profit fronts, and somehow the results were not that great as per the expectations. But still, I think the correction in the stock since maybe 6 to 8 months has been severe, and that is why we have seen a quite good bounce back post the results. But I think UPL being in the agrochemical space, the most vulnerable part would be, of course, the currency, because they have so many countries where exports happen. So of course the cross currency headwinds can be always there. Of course, rupee depreciation will be always beneficiary for them on a prima facie basis, but they have different countries and different businesses. So I think the tailwind also will be factored in UPL.
Okay. Some stocks which are correcting, and Yes Bank, by the way, is down about 8.6%, and Axis Bank is now 4.26% down. It's trading at the lowest point of the day. Brijesh, 4 or 5 private banks, all of them under pressure. If you were to take a trade on any of those, which one would that be? There is a Yes, there is an Axis, IndusInd Bank and Kotak Bank, all of which are under pressure.
See, definitely, Yes Bank as well as the Axis Bank look weak more on the chart. So if we go with the Axis Bank, the previous swing low that was of 544, 545 had been broken. So keeping that thing on the stop loss, or say 548, one can go for a sell side with the target of 520 or below that. I think 520, 515 is a level which should hold on. Regarding with the Yes Bank has been concerned, the recent swing low of 165 has been that was a 52-week low, and from there we have seen our stock bouncing to the level of 250 or 260 or level, and from there we have seen again lack of sell off coming up. So right now the stock has been quoting somewhere around 180 or 182. So any bounce somewhere around 186, one can go for a sell side with a stop loss of 192.5 and play for the target of 170, 172. Okay.
Got that. Just a few more movers in trade today. Ujjivan Financial, we've already spoken about that one. That's down 16%. You've got a Jet Airways, though, which is down about 5% in trade right now. 217 is where it's trading at. Should pull up an Interglobe Aviation as well to see. The last 2 days, the stock has not done badly. In fact, just given gains, yesterday was up closer to about 4% as well. 869 on Interglobe. Jay, you tracking Jet or Interglobe? Should one be able to take a trade here in any of these counters?
Yeah, see, Brent is going to drop a little more further down. So these are going to be beneficiaries, and these might be mindful that these are just relief rally. And Indigo is slightly stronger than Jet, and so if you go to play them long on this Brent play, I think it's better playing Indigo with a stop below 790 rather than Jet. I would expect somewhere close to 1,000 mark in this relief rally for Indigo. Jet is the weaker of these two, so be a bit more careful than you are. If you want to play this the downtrend that's happening in Brent.
Okay, gentlemen, stay on. Let's get a sense of what dealing rooms are recommending in the session today. Yatin Mota is here with his channel checks. Yatin, good afternoon. What are you learning?
Afternoon, Neeraj. ITC is the first stock. They just reported the numbers, and I was looking at a Edelweiss first cut. And the note says that there are one-offs relating to the Kerala flood issue, and the new packaging norms, because of which there has been a lot of repackaging costs during the second quarter, which might reverse in the coming quarter. So you might probably treat it as one-off. Insurance claims could come in, and the packaging costs would be non-repetitive in nature. So probably dealers are expecting that kind of a clarification from the management. So probably this is one stock to keep on the radar, because the total impact according to Edelweiss assessment is 100 basis points. So watch out for ITC. Could be an interesting mover. ICICI Bank, ahead of the numbers, domestic funds are said to be buyers here. Good volumes, almost 2.1 crore shares traded in the cash segment. And also watch out for Kajaria Ceramics. Post the earnings, we have seen a good move, a long build-up, and dealers do indicate that the HNIs have been buying shares and also taking position in the future and option segment, and they expect the uptrend to continue on the trading side for this stock.
Well, watch out for that. Devina, sorry. So you were talking about Kajaria. Yash was talking about Kajaria. Yatin is talking about Kajaria Ceramics. 2 days on a trot, up about 5% apiece.
Yeah, we spoke to the management as well yesterday, and they were pretty optimistic about maintaining those growth levels of closer to about 14-15 odd percent, which they spoke about. But nonetheless, the volume activity is also picked up on it. Pricing activity is good. Growth prospects seem sanguine. Siddharth, Kajaria Ceramics, according to you?
Well, it's been a non-performer since I think many quarters now, and backed with many other things. GST, where unorganized play didn't get suppressed much. They found out their own way. Second reason would be, of course, the reality play where there was a lot of inventory piled up. But there also the demand was quite low. But I think going forward, I think in the consumption space, of course, Kajaria is one of the leaders in the pack. And we believe that if somebody is holding up and seen the non-performance altogether, I think there could be a good times for Kajaria in maybe 12 to 18 months from here on. So if somebody who is holding it, I think one should keep holding. But there is no point because there are a lot of other consumption plays which are available. So there is no point of doing fresh buying.
A tiny tune in the Indian Overseas Bank, and the numbers optically look okay. The losses have narrowed, the asset quality is looking slightly better, and the stock has gained intraday in trade. Remember, something like this happened to OBC as well, that the market was not pricing in anything from the numbers and the stock was up 6%. Get the intraday of IOB on the screen and you will see the stock having moved up a little bit in post the numbers getting announced. So 8.5% now for IOB in the session after these numbers have been announced. Good numbers, and the stock is duly reacting, up about 9% now. Remember, as I said, a similar thing happened with OBC as well in the session today. But the one name that is ending the show, the markets rather weak from the banking space has to be Yes Bank. It's ending about 9% lower in trade. I would want Siddharth Sedani to comment on both Yes Bank as well as Ujjivan or Equitas. But before I do that, it's 3:20. So let's get in closing strategies from our experts. Brijesh, I'll come to you first. Your top closing strategy.
See, I'll go with V-Guard. Right now, the stock has been getting somewhere around 175.5. So one can go for a buy side about 175 rupees 70 paisa with the stop loss of 171 and play for the target of 183, 184 as a BTST or as a 2 to 3 trading session. Another call would be Godrej Industries. The stock had bounced from the recent swing low, followed by the oscillator was been trading on the oversold zone. So right now it's been quoting somewhere around 460. So if little dip somewhere around 458 or say 455, one can take a buy call in it with the stop loss of 440 and pay for the target of 480 or 482.
Okay. What about you, Jay?
Yeah, I'm thinking of two strategies actually. I think the markets are deeply oversold, and when we come back on Monday, I think this market is going to bounce back. I think I will go for a 10,500 call on the November series. I'll buy it somewhere around 57 to 60 and place a stop below 30 and expect the market to do better over the next coming week.
That's interesting. Bala is playing for a bounce come Monday morning.
Yeah. That's, but obviously there are going to be different factors also that are going to be at play as to how global markets shape up, because we did have Manav Chopra also a few days back talking about that cluster move on the downside, but the global markets not staying favorable, you probably couldn't see that move culminate into
no, the global market is not favorable right now too. The only trigger that we probably have is the US GDP numbers and how they come out, and if they can change those market moves as well.
Meaningfully,
but
yeah.
Yes, Jay is playing for that bounce on his belief that the markets are oversold.
Sure.
Wonder if fundamentally there could be some bit of a bounce into some of those names that have gone down quite strongly today. Siddharth, do you track Ujjivan or a Yes Bank?
Well, Neeraj, we don't track Ujjivan. We track Yes Bank. Of course, the numbers were disappointing in the front of Yes Bank. In terms of asset quality front, in NNPA provisioning been higher, and we know that the stock has been under the hammer since the RBI circular has come out on Rana Kapoor. Of course, the stock is reacting today, and still we would like to say that currently let's not touch upon Yes Bank at the current price also. Let's wait and watch how things move, who is the next successor coming on the forefront, and then only one should take a call on Yes Bank. Well, in terms of Ujjivan, of course, the new circular by RBI in terms of separating NBFC and SFB business, I think market is unable to understand how the equations and arrangements will work out, and for that Equitas and Ujjivan seems to be correcting quite heavily. But today's market condition, Neeraj, let's understand, is in such a state and scenario that any one single negative news hammers the stock badly. So that is the case with these two companies also, although we don't have a coverage, but we believe to avoid all these three companies, I think the better stock to look at in the private banking space would be IndusInd. Although the stock has corrected, I think here it gives you a good value proposition at the current levels. I think IndusInd Bank can be looked at.
Are you tracking, you know, the DTH players in the cable space, Dish TV in particular, and what happens hereof?
Well, again a problem of disruption here, the way we have seen in the telecom operators. Here also it's a play of disruption. Dish TV is unable to cope up with the subscription growth, what it is talking about. So overall perspective, of course, Reliance taking over Hathway, and then I think there is complete disruption going. So in the DTH space also, we are not recommending any of the stock in the space. In fact, from the same space, Devina, I would like to point out one company, that would be Sterlite Technology. If you look at the results, was very nice, 40% revenue growth, little less than 50% on the profit front. Margins were quite good. In fact, the order book was all-time high at 9,400 crore, out of which 3,500 crore is from Indian Navy. 1,000 crore capex is there for the company, and we know that in terms of 5G rollout, which is happening gradually, I think in the optic fiber side, Sterlite Technology looks very interesting to us with a target of 400.
That's Siddharth. We'll leave it at that. Thanks very much for joining us. Appreciate you taking out your time. Jay, anything on a Dish TV? Yesterday was down 15%. Today is up 12%.
Yeah, such kind of volatility is telling us that, you know, the markets are nearing end of a short-term move at least. And I would think Dish TV has potential to bounce somewhere close to 52. It does still look like a corrective bounce. One more low below the lows it made a couple of days back. That will complete the bottom for the stock. So, you know, it's a bit volatile, but the message that's the volatility is sending us is that, you know, a turn is near.
Okay, Jayman, stay on. Let's start wrapping up the markets, and we'll get in final thoughts from both Jay, Bala as well as Brijesh. But this is how we are shutting shop, about 1% lower, and in or around the lowest point of the day. We haven't broken 10,000, but 10,023, shutting shop around the lowest point of the day. The Nifty bank certainly is trading at the lowest point of the day, because private banks today have gotten sold out. Or sold off quite strongly, actually. A bunch of private names are down, and I'll tell you about them in just moments from now. The mid caps and the small caps haven't done too badly. I think it's essentially the large private sector banks coming off, which has led to the Nifty bank, and the Nifty coming off, not so much the mid caps and the small caps. But Devi, now we speak about them. Let me talk about the large caps, and let me tell you about the gainers first before we get to the private banks and the losers. So UPL result reaction 4.5%. Some gains for Titan, and then the auto names, the likes of Bajaj Auto, Tata Motors, Hero MotoCorp out here. All of them have done reasonably okay. Reliance Industries lending that little bit of support as well. But look at the banking names. Yes Bank almost 9% lower, Axis 4.5%, IndusInd Bank 3.5%, Kotak Bank 2.5%. A clutch of these names have come off. IT is not looked too good. HCL Tech, TCS, Infosys have looked wobbly. So when banking and IT, two heavyweight sectors, fall in tandem, it's very difficult for the markets to stay in the green, and that's what's happened today, and which is why at the lowest point. Do we see a replica of sorts at the broader end of the spectrum, Devina? Actually, the mid-cap index has done rather well.
Well, a few specific names, Neeraj, actually, if you go to see, because in the small cap space as well, the maximum heavy cuts that you're seeing are only of those two stocks that we spoke about, that is Ujjivan and Equitas. Aside from that, cuts above 5% are pretty limited. So I'm going to start off with Ujjivan. It's probably going to end the day with 17% cut. Equitas, the stock's going to be down about 24% by the time we shut shop trade. The good reason, we already had the management talking about what the implications of this RBI circular is going to be for each of them, and the stocks have reacted likewise. Jet Airways is the other one that sees a down dip day in today's session. So the week is going to come to a close with Jet Airways losing about 6% in the session. 215 is where it's trading at. Infibeam continues to grind lower. You've got JM Financial witnessing some amount of pain. Infibeam's down 3.5%. JM Financial is down about 5%. Then taking a look at a few other names, you've got a GMDC. That's the other stock which loses out in trade today. The numbers came out, the stock probably getting beaten because of the disappointment there. Indiabulls, Real Estate, United Breweries, Voltas are some of the other names that have seen some amount of pain and correction in today's session. Amongst some of the gainers, you've got the likes of a Dish TV, which is doing well for itself after yesterday's plummet. The stock has recovered ground and 10% higher for the day. Raymond does well on the back of numbers, and so does L&T Tech. Both these counters trading in the green. Raymond is up 11% by close, and you've got an L&T Tech gaining closer to 8%. Edelweiss was locked up in upper circuit. Goes to see whether it has managed to hold on by the end. Yes, 5% for Edelweiss on the back of a stellar quarter, 276 crores profit. Siat, Kajaria Ceramics, and IOB, all result reactions, all of them doing well and all of them being rewarded for the kind of earnings performance that they have posted. But nonetheless, it's the start of the new series, but the end of the week, and yet again it looks like a very precarious position that we are at before we start off the next week.
Yeah, it'll be interesting to see if the confidence of Jan, we haven't asked Brijesh about his thoughts, but interesting to see what happens there. But the banks, and ending at the lowest point of the day for the banks, 10,014, perilously close to 4 digits essentially that we are in for the Nifty. Bring up, okay, this is the 5-day performance, then we'll get to the turnover in the session and the volumes. But the 5-day performance, the Nifty 50 down about 2.7%, principally. No, actually it's across the board. There are a couple of financial names which have lost out. There is Infosys from the IT pack which has lost out. TCS is down about 6% too. And
Reliance Industries actually doesn't feature in this list, and neither does an HDFC. None of the HDFC twins I can spot here.
Neither in the gainers nor in the losers. There is HDFC out here in the gainers list, but HDFC Bank and Reliance Industries are certainly missing from this list.
So these are the actual heavyweights on the index, so they're missing in this list. But nonetheless, you've got some respite coming in to some of the oil marketing names, and HPCL doing okay, 5% odd. Crude, particularly this week, came off significantly, which probably saw a reaction on the oil marketing companies as well.
Yeah, and HPCL, I mean, yeah, you just mentioned that, but I'm saying ahead of the numbers, for some of these stocks to enter into the numbers strong is interesting. Not surprised there, though, Bajaj Finance ending as the top gainer, 8.5% higher.
Yeah, let's take a look at the turnover for the market, and then we take a look at the individual breakdown of the index and the point contribution for today. So that's the NSE F&O turnover. Obviously, it's going to be slightly more subdued because it's the first day of the new series. This number will start to kick in and start picking up as we move into the month. But on the cash side, that's gone back to average of about 32,000 crores.
Yeah, it's interesting as to what's happening here, but let's wait and watch if this last just bring up the market breadth today. I think probably a lot more positive than what the indices would say. Yeah, it's just about, well, almost even Stevens, but for 100 stocks here and there, it's not been a bad day for market breadth for sure. A bit of a recovery from those starting
more
losses.
Volatile actually.
More volatile.
In the mid-afternoon session, as you can see, not a very decisive move for neither the bears nor the bulls, at least from a broader market standpoint.
Yeah, very true. Anyways, final thoughts from our experts then. Jay, actually Brijesh, let me start with you because Jay said he's kind of shown his hand about on the index. Wonder if you echo those sentiments. Is there to your mind, is there a chance of a bounce back?
See, Neeraj, if you remember on the show started, I said that I would be buyer on the Nifty with the stop loss of 9,952. That is the low which was made in the March. and there is a one-way rally. So 9,950, I'm looking, it should hold on at least for a bounce back. And the bounce back which I am looking for was 10,180 or 85 followed by 10,255. The crucial level for the bounce back to make a sentiment from a bearish side to the bullish side would be 10,385. So by Monday, what I was been looking, we might see a bounce back. The only problem which from a chart which I'm been looking is the Bank Nifty. The Bank Nifty should not break the recent swing low that was of 24,240. It should hold on. If anyhow, if this thing breaks, then the another leg of selling can make this Bank Nifty drift to the level of 23,600 or say 26,750. So another say 500 points of correction we might see. So only the thing is what I'm looking, this Bank Nifty should hold on. If Bank Nifty holds, then definitely Nifty can bounce to the level of 10,180 or 85, which I was been looking for.
Okay. Jay, your closing thoughts, and obviously you said that you're going to go ahead and go long the 10,500 call option, but anything else that you'd like to add?
Yeah, I like Intellect Design at this point. It's one of the strong stocks within the within this decline, and it looks like it's poised for record highs. It would be better off if one can wait on Monday or for some sort of a pullback, say 5-6% lower. Then I think it's heading for record highs past 280. But you got to, as I said earlier, once again your allocation has to be much lower. We are in the midst of a correction, and within this correction there's going to be a bounce back. So I'm trying to play long for the extreme short term.
All right, gentlemen, we leave it at that. Thanks so very much, Jay as well as Brijesh. Appreciate both of you taking out the time and sharing your views with us here on Countdown. Well, but that's about it. That's a wrap to the show. Thanks a lot for watching from Neeraj, myself, and the entire team that's put the show together.
Great weekend.